The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time. And I'm just trying to lift this chart up so you can see it a bit better. This is the 120-minute E-mini. Let me just draw this so we've got everything in line. So like Technical Friday today, I want to go through some of these technical details. I got that. Great. It went right up to the thing. Okay. Thank you for the programming earlier on, and hopefully we can keep up that standard. Dow's down 30 at 20,898. The S&P, let me just do it this way here. INDU. Okay, here we go. The Dow's down 30 at 20,889. The sell mode continues. The sell mode in the weekly chart, sell mode in the daily chart. What's really important about this, we went to a lower low yesterday to 20,798. That was a trough C if there's no new low today. And the stochastic is turning down. It's now below 80%, it's at 74%. As of this very second, the MACD has crossed negative, but the day is young, not even 2 hours into the day. Wow, it feels like much more. Not even 2 hours into the day. Down 24. Very important session. I'll just do this very quickly here. I'll show you this chart if I can find it, get it back again. All right, where was it? Was it this chart here? Nope, wasn't that chart. Oh, and there it is. I wanted to show you this just to explain to you why we remain short. We've added another short position today in one of the indices. And that is because there's a chance that today, there's buying pressure that keeps coming in, but we've had 10 weeks, and so far the Dow has not gone above the 21,169 all-time high. It was made March the 1st. What's really important about this, you see the MACD's deflected lower showing very little strength. The stochastic is at 74% underneath the 80% level, which is what I like to see, above 80% if you're bullish. The other thing is that the stochastic is way below where it was on March the 1st. So is the MACD. And that's just showing the internals of the market are very weak. Price is the arbiter of a trend. And right now, the price is still holding pretty darn well at 20,895 on the weekly chart. But the technicals are hinting strongly that that could be all over by Tuesday or Wednesday of next week. This is the pattern we're looking at, inverted Y-shaped formation, double top, or called the drop bucket pattern. It hasn't made a new recovery high. That's starting to fail. Let's see what happens by the end of the day. Monthly chart has made a PT, but still well within the 21,169 striking distance. 120-minute chart right here tested the 200-period moving average of 20,830. Went under it yesterday and then bounced. Let's see where we close today. The S&P, SPX.X. Underneath the 9-period exponential moving average, this is just the third time since it broke out back on the 24th of April. It's gone under the 9-period moving average, but it hasn't closed once underneath it. It closed below 2392, I believe it is. 2392 or 20, let's make it 23. Yeah, let's make it 2392. Would be a negative on the day, but the MACD hasn't crossed negative yet. It's interesting because the ESM17, which trades overnight, at this point is under the 9 EMA. It's at 2387 down 350. And that weekly is strongly suggesting that this is a tough phase for it. Let's go to, so parameters to watch are, let me just quickly do this because I know everybody asks me what it is on this 12th day of May. A close above 20,930 in the Dow would suggest once again the 9-period moving average has saved the day. The close underneath 20,900 says, this weakness just persists, and the Dow has just too many weak links to allow the strong ones to lift it up. Whereas if you go to the S&P, it did make a recovery high, but it's still very weak. For 10 weeks, it hasn't really closed above the 2,400 level. This is going to be very important. So S&P parameters, at any point, if it starts to trade at 2387 today and holds there for one whole hour, it's probably going to go to the low of the of Thursday, 2381.74. Probably go there by Monday. Okay, so this is a very important phase. But it's even more important if you're looking at the Qs. The Qs haven't yet gone to 138.64 to go to a leg E. It's at a peak D. MACD is just flattening out. The histogram is starting to shrink a little bit. The stochastic at 95.82 is within. This is really strong. So it's just going to have to be bad news that filters into the QQQs. And the only way I can think that it's going to do that, really, is if the SMHs, semiconductor index SMH, trading at, where did it go? The SMH trading at 82.65. If it did make a new recovery high today at 82.91, let's just move that over, 82.91, days young, I'm still going to put that in for now, 81, and today's the 12th. So I'm looking at this and I'm suggesting that the semiconductors are really close to pulling back. But if you look at TSM, which is Taiwan Semiconductor, it made a doji candle high, all-time high yesterday. It's in leg E in the weekly chart. Most importantly, what it's doing is that the weekly chart, the daily chart, has gone right into the Chapman wave inside track repellent zone. And we're going to see if there is a pullback. The high of yesterday at 35, what was that, 35.60 something? 35.80. If there's a pullback into Tuesday or Wednesday of next week without a new high and it closes under 34.70, that'll be the first signal that one of the best of the semiconductors is starting to fade. And the other thing about it is that the AMAT, which is Applied Materials, has gone to a new all-time high today. I've got it in leg B. I don't know if this is really a leg B. In the weekly, in the daily, there's nothing to say. It isn't a leg B, but it's one of the few. Leg E in the weekly chart, leg C in the monthly. Let me put it together with Intel, which has been weak, testing the 200-period moving average of 35.56. It's at down 13, made a recovery high and then a pullback just the other day from 37.50. It's down 2 points. The monthly chart suggests it's really struggling. Weekly chart says, it's really struggling. I think that Intel is giving us more information on the intermediate term than the other stocks that we were looking at a moment ago. So I'm saying the SMH is going to be quite a big participant in any real pullback in the QQQs. If I'm looking at the QQQ, I really have no choice but to look at Apple. Apple at this particular point gone to a leg F in the daily, leg D in the weekly, only a leg B in the monthly. So looking out, I'm still very positive on the short to intermediate term situation. 10 weeks of down correction, basically 10 weeks of S&P. New York Stock Exchange couldn't make it. The IWM is terrible. I'll look at the 10-minute and 2-minute E-mini charts and give you parameters as soon as I get back. Basil Chapman, Dow's down 40.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So continuing the thinking about the QQQs, because we need to find out what has the potential to weaken here. Amazon's at just about at an all-time high at 956. It made a high above the 954 March the 1st high just a few days ago. It went to 957.89. Very interesting. So my 120-minute chart has an alternate count and suggests that there could be slightly higher highs. 957.89, we could go to the 959s, maybe even touch 960 over the coming day or two. But there are signs that Amazon's really close to turning down, and the weekly chart is down. I'm calling it a leg F for now. And it has made that 5. That 5 has continued in the, it's still a leg, Chapman Wave 5 in the weekly chart. So let's look at Facebook. Facebook is, in fact, peak E. Made a top just the other day. Hasn't broken it. That could be a peak E in the weekly and a leg F. I'm calling it just for now leg F. I think it could have recycled, but I don't have to worry about the monthly chart just yet. But Facebook's showing some signs of wear and tear. At 152, at 149.93 right now, down 11 cents. That's nothing. If it takes out 148 support, it's going to go quite a bit lower. Test the 144s in the 9-period moving average in the weekly chart. A break above 152.20 and says, hey, you know what? It could try to make a new high. I think that's going to be tough. I want to look at Netflix. And Netflix is, in fact, recycled A, B, C. This is in leg D right now, a peak D in the daily, peak D in the daily, leg E in the weekly, leg C in the monthly. And so far, it's getting close to some kind of a pullback. And if I look at Google, I always look at Google, I look at Alphabet. Goog is trading. It did make that D. It was a G/C. We're waiting for that D. I forgot to check it out. There it is. D. So when I put this whole thing together, we are within days of seeing some kind of a pullback in the Qs. That's the NASDAQ NDX 100. Meantime, back at the ranch, if you look at the IWM, it's really struggling. And what I said earlier in the day when I did Larry's show is that if I think I said that either I was thinking it or I said it. I've done so much analysis since about 5:30 this morning. If IWM, well, it's already done it. It's trading under the 137.80, which is like underneath the halfway through the wick of the Chapman Wave Roman candle that was made yesterday. This suggests that there's a greater chance that is going to test the low of 136.98, the low of yesterday, then the 9-period moving average of 138.44. So this is a weakness. Look at the MACD and stochastic, very weak. Look at the weekly chart, peak D and really fading. I think that Russell 2000, I think it's got a real problem. Okay, let's go on. We want to look at gold, GC. GC's hit the 2.5 9-period exponential moving average, and it's been repelled from that short term. It's really the weekly chart that makes me a little nervous. Yes, there could be a bounce. I don't see any reason why there shouldn't be a bounce. I think it's just a bounce. I think we have to come back and test this. The weekly candle of last week was horrible, and we went under it. We were a little bit above the close of last week. But I'm just thinking this is a bounce, and I'm even going to do this. I'm going to draw in maybe a little more on the upside. I'm treating it as an arch formation that could build. Now, we have to then look at silver. Silver itself plunged straight down, hardly a trough. Well, the troughs didn't even count because this is the first time it's touching the 9-period exponential moving average since 18th of April, where it was at 18.50. Now it's at 16.42, having hit 16.06. So, yeah, it's a nice bounce. I'm just treating it as a bounce for now. I have no reason why I should think of it as any other way yet, because of the weekly charts. Look at the dollar. Dollar's down 40 cents at 99.23. It tried to get above the long-term trend line of the weekly chart. It did it for a couple of hours over the last 2 weeks, and then kept falling back under it. Now it's right on the line. So this is going to be very important. I'll tell you right now. A close next week below 98. Actually, let's call it the low. Below 98.54. Would suggest that gold could actually start a better rally and that the dollar is going to be very weak. If you look at the EUR USD, that's the euro-dollar currency pair, nice bounce, but it did make a peak D, and I have to now put a down arrow because of the number of times it closed underneath the 9 EMA with the technicals very weak. So the euro is bouncing. It's in the up channel. It went to the Chapman wave inside track, repellent zone, got repelled. It's going to be very important. 1.081 is the key support in the 200-period moving average. It's at 1.091. We're going to see how this pans out because of the panoply of different directions that the currencies have moved over the last couple of days, up and down and up and down. I want to look at the USD JPY. This is a peak E, and wow. A peak E. And often the trend has been the same as the Dow, same as the dollar, but not the price movement. And lately they've been in two completely different tracks. So this is an A which has gone weekly and it's gone above the downtrend resistance line. So far, very near term, it's pulling back, but it's in a buy mode, and that buy mode will be negated on a close at 113.33 right now, just down 0.52. A close below 112.75 will change the trend shorter term to downtrend. Okay, now what we want to look at is, let me just see, DXJ. This is the Japanese. Oh, let me just do this. NK. I'm looking at the continuous contract. Continuous contract made a peak C, and it looks almost like the QQQ series. There was a spike to the upside in an E/A in the weekly chart. I'm going to do a little more work if I can over the weekend. It's in leg C in the monthly chart. So far, there's almost like the USD JPY, the Japanese yen currency pair, US dollar currency pair. So this is the Japan currency hedge. That you were looking at, the question was DXJ. I'm looking at this and I'm saying make it simple. At 19,820 down 55 in the futures contract, the continuous contract of the Nikkei 225 continuous contract. If it closes by Tuesday or Wednesday under 16,670, then make it 19,650. That's going to be a big negative. If it holds here and has a quick spike Monday or Tuesday above 20,040, that will make leg D. I think it's very close to a top. I'm not sure. I can't call it a top just yet because the MACD is very strong. Stochastics at 92%. It's almost like the QQQs. I have to wait for a break of the key trend line support. Now, I was asked about the IBB. IBB is rallying right now at 929. I think I'm not sure if this is a play that says, you know what, we're free to roam right now. Nobody's looking at us. This is a NASDAQ Biotech ETF. It's at the 9-period moving average of 923.38. That's where there's resistance. My thinking is it's just in a trading range. If you are long, I think the question was, what was the question? Question was, Dana wanted to know, hello, Basil, current long position in LABD at 954, good profit. I don't want to give it back, but I brought this with the expectation this would go to $11.20, possibly back to 12. Let me just get there. LBAD. Oh, I never did this. As I'm going out, I'm just going to show you the 2-minute chart. Had a little bit of a bounce. Watch 239, 2389 on the E-minis and 2385s.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So LABD is, in fact, the direction. Exactly what is the name? Direction daily S&P Biotech bear 3 times. So this is 3 times short. Yeah. So it's trading at 10.05. What I'd said was, I would make $10 a stop right now. It's at 10.05. And one of the reasons is the IBB, I do think it's going to be pulling back. But you've got to be careful because it's just enough residual strength to try to test 293.33 is the 9-period moving average. Resistance, what was the high? 293.33. Exactly right on the, to the penny. So, yeah, so that's why I'm saying if you keep it fairly tight here at $10, I don't know if you want to, if you got in at 9 something, let me just double check. If you got in at 954, wow, because you might just get stopped out and then Monday starts to turn down. No, I'm going to be quite strict. I'm going to say you can always get back in, but if it starts to go under 10, it means that the IBB is starting to accelerate back up. And let me just do a quick 10-minute chart of this, because this is the daily ritual we got to watch out for, okay? IBB went to peak A, B, C, D, E, and that's an F/B. Yes, I'd be a little careful. I think there's just enough Friday strength to kind of, because it didn't break down, IBB trading up $1.29, I'd be careful. Let it play out. You're going to have your chance. You're watching it closely, probably even closer than I am. So just keep it at 10 and keep your stop there. And you can always get back. You're making money. You can always get back in. The Dow's now down only 3. S&P's down 2.5. Buying just keeps coming in because there's nothing else to do. People are just getting bored of not buying. And that's really an issue for a number of reasons. But at the same time, I think that the weaker sectors will remain weak and stronger sectors have to just complete their moves to the upside. That's there's nothing else I can say. So that's it. So Dan, I hope that helped you. Next question I had was, where did it go? Tennis courts are closed this morning. No, that's not it. This is a question. I had a question about what would be the signs I'm looking for in the QQQ, NASDAQ 100, that would tell me now the upside really is done. Not limited, but done. And I can just make it real clear that at this particular point, 138.57, days young, you've got what? You've got five ticks to go to break the 138.63 all-time high. It's not there yet. It's got to be a bunch of things. And I'm pretty sure that the semiconductor has to be involved in it. And so that's really what I'm looking for. Semiconductor index, SMH, which is trading at 82.66. Right there is a doji candle. How we close, let me make it very simple. If the SMH has this doji and closes about where we are, doesn't have to go too much higher, but round about where it opened today of 82.69, we're at 82.66. If it closes today above that, that's really positive. But on Monday, if it closes above it, then it makes the candle 82.67, 82.69 a support level, and it can have another one-day pop to the upside. If in fact it closes about here, and by Monday's end of the day close, it's actually trading and then closes below 82.37. For me, that's the first hint that I've got the trigger for some kind of selling to come in. And the other thing about it is the MACD is still very strong. Stochastics at 93.34. That's very strong. On balance volume, I prefer it to be a little higher. So yeah, based on that applied materials AMAT chart and the other chart of what was it? I say Lam Research, LRCX. These are my clues as well as Intel. Didn't I do that now? Or did I do it during Larry's show? Can't remember. Anyway, so I wanted to do this because I had been asked about it, and I got another question about it. Bitcoin. I've been talking about it all week. I showed that leg F that was breaking out and it went skyrocketing to 265 round number, 10th of March high. I said, the question was, what should I do? I said, start taking off a good chunk of your money. You can keep a little bit if you had a core position, but raise the stop. That was the day that I said, raise the stop. If it breaks above 332 to at least 228 or higher. So, but I'd be getting out. That was the question. And the next day I said, okay, someone missed it. That was one of the people that was really instrumental in my actually looking at it very seriously. So for them, I did that. It turns out the next day, they didn't hear until the next day. The next day, we had just pulled back a little bit, and I said, be careful. This is Bitcoin investment trust. it was trading at 222, 224 something. I said, be careful. This is the bar that if it's peak F, which I think it's going to be in the Chapman wave methodology, the decline could be so quick that it goes right back to the 192 9-period exponential moving average very quickly. I featured it in my newsletter for quite a few days for the people that had it. And here it is again today. I disappeared. There it is. And I said, be careful. Right there, there's the candle. I said, be careful because we could be pulling back very quick. If peak F daily, peak E weekly, leg D monthly, the 192's 9-period moving average becomes a target really soon. Boom, today. It went to 182, 183.61. It went right through the 192 level. Now it's at 192 support. Just jumped to 198. Somebody's listening and saying, "Hey, you think you know it all?" No, I don't. I'm just looking at the chart. But look at that wick for peak E. If there is a lower high bar next week, that makes a peak E. That's not the issue. The issue is if the low bar says you can't even get above 222, 218 to 222 all of next week, but in fact you break down and you go below into the 167s, it's all over for now. Later, I think 300s is in store. I'm putting it in my newsletter because I like to have something that is just a little bit of fun for people who like to trade short term. So this will be one that we might buy. I would have done it earlier, but it broke out of the Chapman wave cup and ladle. Look at that huge bowl formation. I just had to let it play out without getting it. Now we can think about, not now, but now it's on the radar to say next couple of weeks of pullback, we might think of it again as a trade. All right, that's that. And don't forget, if all of this month it doesn't make a new high above 265, makes it a peak D. You've got to be careful. So now I want to look at the question became, what is SCO? What do I think of SCO, which is the short? Let me give you the exact definition. This is the ProShares ultra short Bloomberg crude oil chart. I believe this made a peak F. So the question was, can the XLE and energy per se become, this is an alternate count, peak F because that extended above and it went to a 1-to-1 extension. So maybe I'm wrong, but right now I'm going to put a down arrow there and say that crude oil with the 1-to-1 extension, USO, means that crude oil is a little bit in play here. It's at peak B. So it might not come back down to the 9.92 area, the USO we're talking about. I'll talk about it more when we get back. I don't want to rush this because there are people that are looking at it. I'll be right back. Basil Chapman, Tiger Predictions.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We're back. So a couple of things I want you to do. Looking at the USO, I think there's a chance it could go a little bit higher. I'm going to draw an H pattern in right here, like that. Going to about, it's a 9.92, the United States Oil Fund. Yeah, maybe it could go to the 10.08 area, 10.20. If it breaks above 10.20, that's very impressive. I think it's going to be kind of stuck right here. That's my impression right now. The XLE I was looking at before. XLE is almost the same thing. XLE at 67.92 could go to a leg B above 68.48. I'm thinking that, yeah, 69 is going to be a lot of resistance, and then it has to do some retesting. The weekly chart is really trying its hardest to round in, and it's very difficult. So those are the things I want you to look at. Now, within the context of the markets, I want you to see the XLU is trading at 51.80. I must mention we are long the XLU in my opening call. It's just been in trading range. But I can just tell you this, that if the market starts to really decline, and means the Dow goes underneath 20,000, 800, the S&P is broken down, starts to go under 23, 67, 62, somewhere around there. I think money will flow into bonds. And that makes this pattern right here, the arch formation that can potentially go to a cup formation. We've gone 1 week a little bit too deep. So that says, okay, that might be limited. But I'm looking at bonds, 121.35 on the TLT, up 87 cents, gapped up. Be careful, because if TLT takes out 122.39, the high of the 3rd of May, that's going to be very positive. And I think that's where the market starts to pull back. So, as Peaky in the Den says, market down, haha, what's that look like? Yeah, it looks like this. It looks like the Dow, this chart right here, just chugging along and not finding great impetus to the upside. But what really is important is that the QQQ series is so close to making leg D at 138.64. It's got 10 cents to go to do it. Will it do it today or not? The MACD is really flattening out, but not negative, and the stochastic is holding at 95. So I was asked actually the other day, okay, fine. You've been correct in looking at the market consolidating for 10 weeks now. But can you explain within your technique? Let me sum it up. It wasn't said like this, but let me just say it. How come you didn't say go long the QQQs based on your technique? Basically, I missed it. I missed it because it gapped up, and we had to wait for a peak. Let me look at this. Even here at 132.88 to 132, this right here is actually an A. Let me show you something. So this is a gray A. And, all right, here we go. Within the context of the markets, this is Technical Friday, let me just do this. That was a peak D at 132.43 on the 21st of March. It pulls back quite sharply. There's a horrible candle, tries to run in, then goes to a lower low. And that lower low on the 27th of March started a bigger move up with a stochastic running sharply, the MACD, and then there was what I call a deflection lower in the MACD. This is what I'm expecting the Dow and the S&P weekly charts to do. Deflects lower and drags the price down. The stochastic just pops over 80%, goes to about, what was it? Goes to about 90, 95 maybe. Goes to 90% right there. Oh, 90%. All right, 90%, and then pulls back sharply with the price, but the price doesn't make a new low. So this should be, let's call this a peak F. And this is a brand new A, that's a brand new B, that's a brand new C. That says you should get your D. So let me put that in here. I don't want to make this complicated, but this is Technical Friday. If this was a brand new A, that was a brand new B, because we didn't take out that low on this move here, then this should be C and that should be D. I'm comfortable with that, but I'm going to call it D just for the aficionados of the Chapman wave, a D/C. And that says, aha, there it is. You shouldn't have missed that. We should be going to a D, a regular D and an E in the alternate count. And that should be above 138.63. And from that point on, I start looking to say, okay, now we can turn down. So I'm the one that misinterpreted my own indicators. The MACD cross positive, that was the best signal of all, with a very wide beta between, I think it's a beta or theta or whatever, between the 9-period differential, the green and the red, the fast and slow moving averages. Stochastic didn't pop up and break down like it did before. It held in the 95% area. And that was the mistake, to say, no, don't even think about it until you get some kind of a D, E, or an F in the daily chart, and you get the stochastic start to fall before the MACD turns across as negative. So no, my indicators were 100% correct. Personally, I was 100% wrong. It was off my radar, and then I couldn't get in. Once I recognized that it was going higher, because every bar was higher. Look, it didn't make from the peak A that it made back on the 20th of April at 132.88. The next day it pulls back, then it gaps up on the 24th, and from that day on, it didn't make a peak until it went all the way to the 2nd of May. And then it had 2 days, and the third day was up again. And even now, it's very close to making a new all-time high. So we've got to wait. Now, the big question I had was, and before I do that, someone wanted to know about the 10-minute chart. This is the IBB 10-minute chart. Let me go to the ESM 10-minute chart right there. So this is a retracement rally failure mode right now. It is still a peak C minus. Technically, it's still a C until it takes out the low that was made at 2384.25. But I think it's going to be a struggle. I don't see any big spark to the upside in the Dow. We're going to be watching the Qs really closely. And Steve Rhodes has a webinar coming up next Wednesday night, I believe it is. And congratulations, Steve. Great analysis on the Qs. Did a very good job. And that's the move that I missed right there, and especially when it gapped up. I thought, uh-oh, too late. And in a sense, it was too late, except if you close your eyes and just grab it. Right now, it's getting very close to giving me some kind of a signal. So, okay. So that's what I wanted to explain. And the next thing I want to do is quickly to go over to the VIX index. And the VIX is back under 11. So $VIX.X, what we're looking at nothing. Up 10 cents at 10.70. By the end of the day, if it suddenly goes above 11, that'll be a positive for Monday pullback. Positive in the VIX, negative in the market. If it stays here or goes down to 10.55, it says, nah, just expect further rotational buying to come in very selectively. I've got to add very selectively. I do not ever dismiss something like a GE plunging like it is down 72 cents. Look at General Motors plunging down 68 cents. Look at Ford plunging down 11 cents at 10.90. Look at the one that's been the absolute best, although they get the worst ratings. Chrysler Jeep Chrysler, Fiat, trading up 6 cents, holding quite well, but it isn't leading. It's leading the pack, but it's not leading in terms of saying, hey, this is a sector that's on fire. Look at me, I'm the best. This is just saying this is an individual situation. I want to look at LAD, L-A-D. I'll do some analysis when I get back. Basil Chapman, Tiger Conditions Hour. Dow's down 17, S&P's down almost 4.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I just wanted to look at Lithium Motors. This is a company they sell out in the boondocks. That's where they have all their sales, showrooms, etc. It's trading at 89.94, down 1, made a lower low now after that peak D. Look how many peak Ds it's made there in the daily. Look at this. No, it wasn't the daily. It was actually the monthly. Look at this. Peak D is what you expect. There's a D, instant restart. There's a D. There's a D. The very top was right there. Chapman Wave 2-bar reversal, 12656, 12656. This is a month of December, January, and November, December of 2015, and it hasn't been able to rally significantly since. Yeah, this is not telling us not a good story here. Okay, we've got just a few moments here. My service is called The Opening Call, a very comprehensive daily newsletter, and basically what we do is, let me show you, let me just grab this. I start sending out charts early in the morning. Usually the daily goes out. The daily, this is the daily. I'm showing that double top from the Chapman Wave Peak D and Chapman Wave 5 on the 1st of March at 21,169. We remain short the Dow. It's making a little mini 1, 2, 3, 1, 2, 3, 4, and we're going to see what happens here because this is a very important moment. If it closes underneath the 9-period exponential moving average again, that's going to be very poor action. Meantime, Dow's down just 20, no big deal, but it is not making a new recovery high, and that's important. So I do this. This is what I call basically a naked chart with just the 9-period moving average, and the red is the 20-period exponential moving average, plus the Chapman wave 5 notations. This has got all the other things, got the MACD. So the MACD is just about across negative, hasn't done it yet. It's very close, and the stochastic is under 80% at this point, and that's not going to be good. So that, and then there's the 120-minute chart I show for greater detail. Chapman wave 5 completed, we're on the way down, all this sort of thing. Why we're looking at, I said today, if we minus 40s or more at 10 a.m. Eastern time this morning, it was just strong. A give back of yesterday's late rebound is unfolding with a negative close by day's end. I go through the overview. I show exactly what we're looking at, what's working, what's not. Talk about the NASDAQ and the semiconductors, very important. You won't get a major sell until they start turning down. And then there are other charts that I show, plus my Trader's Corner right here, where I have, 21 bullet points, plus stocks that we're looking at. Sometimes I give prices of ETFs and things that we don't have. I added a short today on a particular ETF that I think, or index that I think is starting to weaken considerably. I showed, this is that whole Bitcoin thing. I think this is the Bitcoin thing, yeah, that I showed this morning. There's some other things. Here's the, let me show you this. And then every day, I send this both to the den and to the, right here. This is the E-mini, daily, weekly, and I usually show the 120-minute chart, and I give an analysis of what we're looking at, give the parameters, etc. So it's a very comprehensive look in the stocks that we are either looking to buy or we have, and what we're doing. A lot of charts, a lot of information, but my Trader's Corner just sums it up very neatly in about 4 or 5 lines, and then I go through all the stocks that we are looking at or have and the positions that we are putting stops or buy stops in. So that's what we're looking at. Now, let me just do this as we're about to wrap up. Watch the VIX today, just for a little bit of information. If the VIX closes above 10.90s towards the 11 as the market pulls back, that's a hint to say, watch out Monday. But if it just holds here or goes down to the 10.50s, it says, nah, ho-hum, still waiting for the Qs to finish. And as I said, the SMHs, it's really going to be up to the semis to pull the market back. So I hope I've covered a lot of information. Let me just tell you that gold has to break once more. Gold has to break into 1239, 1242 area Sunday night. That's going to be really influential. And if the dollar breaks down, it has to close under 99 Monday. And then we've got a bit of a change of trends here. Basil Chapman signing off. Have a wonderful weekend. Check out my opening call. Hope you'll find it beneficial. And I'll be back on Monday. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.